Bismillahirrahmanirrahim. Assalamu alaikum, everyone. Welcome to today's session. And this particular series of session is about a practice question. That's AFM Practice Exam 1. It's valid from September 22. The question name is Have Company. Typically a question related to acquisition and merger. And this is a 25 marks question. An examiner definitely can examine the question with a section B area of AFM exam and related to the acquisition merger. Typically, most of the material, majority of the material belongs to this question belongs to this question for the topic acquisition and merger. Now start question. First of all, you will read the question comprehensively. Number one, distinguish different types of synergy and discuss possible sources of revenue synergy based on above scenario. So, as you know that your subject is not only about rote learning, it's application based on. So that's important for this question. Number two, based on two different opinions expressed by Have and Strand Company, calculate maximum acquisition premium payable in each case. Okay, this is something about the theoretical context. And calculate the percentage premium per share that Strand Company shareholder will receive under each acquisition payment method, and justify with explanations which payment method would be most suitable for them. Examiner here highlighting the point, you have to justify which payment method would be more acceptable to them. 7 marks. And professional marks will be awarded for demonstration of the skills in analysis, evaluation, skepticism, commercial acumen in your answer. That's a point. 5 marks. So this is what the question the ACCA body published when the paper structure become changed. That's about September 22. And a very important question that includes calculation theoretical aspects and incorporating the professional skill marks with respect to analysis, evaluation, skepticism, and commercial acumen. So we have just read the question quickly. Now incorporating the facts accordingly. Main context is also important. The following exhibits available left hand side of the screen provided information. Have Strand information about Strand on acquisition targets. Okay. Financial information relating to both companies and suggested acquisition method. Okay, the information should be used answer to question requirement within your chosen response option. So number one, so after reading of the requirement and the main context of the screen, we have identified that this is the question of acquisition merger, number one. Number two, Have is a Strand is something target company, Have is acquirer here, and now enter with the main context of the question. Now come on. I hope that screen visualization is very clear to all of you. Okay, now Have Company is a publicly listed company involved in the production of highly technical and sophisticated electronic components for complex machineries. So the company, it's involved in a business with the highly technical, sophisticated electronic components, and that is so-called a very niche market, a selected market. It has a number of diversified on popular products, an active research and development department, significant cash reserves, and highly talented management who are very good in getting products to market quickly. So it means that company background it's very established. Research development department, very diversified and popular product, a successful business, manpower, the talented management who are getting products to market quickly. So they are not only good with respect to product making, but also to market the product. That means the company reputation it's good. So one thing is about uh, the inside of the company matters related to production and all these things. The human resource, all the aspects, they are good, and also with respect to the uh, market size, they are good with respect to the market size as well. Okay, a new industry that have is companies looking to venture into biotechnology, a new industry that have companies looking to venture into biotechnology. Biotechnology means the that's electronic, but specific to medical business. For example, high-tech biotech machines, for example, MRI machines, CT scans machines, a very high-tech machineries. So although the company involved with the highly sophisticated electronic components, but the, uh, the technical business side related to biotech, it's a new industry for them, which has been expanding rapidly, and there are strong indication that this recent growth is set to continue. So the reason behind it that the management of the have company observed that recent growth, that industry is expanding and highly growth and strong, expanding rapidly. So it's a strong indication about the high growth. However, have companies limited experience in this industry. They don't have a good experience. Therefore, it believes that best and quickest way to expand would be through acquiring a company already operating in this sector. So, very you must have to very much clear with respect to the context of the question. Have company business about electronic components looking to move or diversify with the biotech industry, limited industry experience. So for if they wanted to enter with this market, there are two possibilities: organic growth or inorganic growth. So they have decided by inorganic growth because they wanted here they are justifying that best and quickest way to expand through acquiring a company is in this industry sector, and maybe the reason is limited experience in this industry, whatever the reason behind it, but they have decided to enter with a new industry with inorganic way. That's the background. So this is first the background of the question. Number two, based on this, another company data, that's trend. Okay, the Strand company on the other side is a private company. Number two, the important point, private company. operating in the biotech industry, and is owned by consortium of business angels and company managers. So they actually owned by the company management and some venturers. This owner managed are highly skilled scientists who have developed a number of technically complex products but have found it difficult to commercialize them. So actually the company, a private company, and owners are the main managers. Managers are actually the main owners. They are good in terms of product development. They are highly skilled. They are scientists. They are good for the production side, innovation side, production side, but they are facing difficulty to market the product. So after this statement, we can discuss. So we can identify a point that if have company strong with the market reputation, strong with respect to market the product, and they are going to acquire strand company having a good experience for product development, which have don't have this have company don't have with respect to biotech, but good to commercialize. So if have acquired strand, that's the possibility about the synergy, creating the synergy. So they have also been increasingly constrained the lack of funds. That company constrained by the lack of funds. Once again, commercializing the sales revenue, lack of funds, the financial matters, lack of funds to develop their innovative products further. Okay. Discussion has taken place about the possibility of a strand company being acquired by HEF company. So here the question start that HEF company it's interested to take up or acquire strand company. Strand company managers have indicated that the consortium of owner is happy for the negotiation of proceed. So if HAB is interested, Strand also indicated their consent that okay, we are also ready. So let's start the negotiation. If a Strand is acquired, it is expected that companies managers would continue to run the Strand company, part of the larger combined company. Definitely, there is a question, very strong question. If have acquired a Strand, managers are also owner. Managers are owner. Managers also are the owner, and the management role. It's very important here for this sophisticated type of business because because have don't have any experience of this. So it's clear that managers will continue to run of this large combined company. Okay, so it's easy for the have company with respect to the company's products innovation, research, development, and production side. Okay, Strand company is of the opinion that most of its value is in its intangible asset comprising intellectual property. Therefore, the premium payable on acquisition should be based on present value of infinity of after tax earnings the company has generated in the past 3 years over average return on capital employed by the biotech industry. So this is what the statement with respect to Strand that they wanted to get premium on that basis. However, have is of the opinion that premium should be assessed on synergy benefit created by acquisition and change in value due to changes in P ratio before and after acquisition. So this paragraph is very critical for this question. And this actually related to the requirement base. We need to read this paragraph again and again, and first of all have to understand what's the meaning of that paragraph, then start calculation about the question. So okay, so this is something about the premium Strand company wants for this to sell the company, and on the other hand, have company offering the premium to acquire this company, and both have different basis. So we will read it once again after the reading of this complete question. Okay. Moreover, given extract of the financial information of Have company for X3 and Strand company for X1 to X3. So Have company 1 year data, Have company 1 year data, and Strand company 3 years data. PBIT, non-current asset, share capital, reserves, non-current liability, current liability. Share capital, par value 0.25. Have company, number of shares 600 divided by 0.25, it's something 2400 millions. And Strand company 300 constant. 300 divided by 0.25, it's something about 1200. Okay. The current PE ratio of biotech industry is 16.4 times. And it has been estimated that a Strand company PE ratio is higher than this. Okay. 10% higher. However, it is thought that PE ratio of the combined company fall to 14.5 times after acquisition. If some information is given in the question, so we have to obey that information. Annual after tax earning will increase 140 million due to synergy benefits resulting from combining two companies. Okay, here mention that after tax earning will increase. Do remember that here the data given about the earning before tax, not after tax. Both companies pay tax 20% per year. Strand company annual cost of capital is estimated 7%. Okay. Strand company cost of capital 7%. Both companies pay tax 20% per year. Have company current share price 9.25. Biotech industry pre-tax return on capital employed currently estimated 20% per year. Pre-tax ROCE. Okay. Have company has proposed to pay for acquisition using one of the following methods. Have company has proposed to pay for the acquisition using one of the following methods. Cash offer 5.72 for each of Strand company shares, or cash offer 1.25 Strand company plus $1 3% convertible bond for every $5 value of Strand company shares. And in 6 years, the bonds can be converted into 12 Have company shares or redeemed at nominal value. It can be converted, it's convertible. The relevant point is not that when it will be convertible, what will happen. The relevant point is that what is the value of convertible right now. So this is what about the proposal. Requirement. Once again, distinguish between different types of synergy and discuss possible source of revenue synergy based on above scenario. 6 marks. It's not related to calculation. 6 marks. Number one, we have to first 2 to 3 marks related, or 3 to 4 marks related to explain synergy and types of synergy. Start with a basic definition of synergy and then types of synergy. Remaining 2 to 3 marks related to synergy connect with the above case. Number one. Number two, based on different opinions expressed by have company and strength company, calculate maximum acquisition premium payable each case. 7 marks. So two different opinions. Strand wants to get premium, something about the methodology mentioned by Strand company, and it's actually based on EVA, expected value method, valuation method. Or like the F5 you studied the residual income. And your regular studies you have already covered the topic CIV method. Something resemble with CIV method. Intangible value methods. And have company wants to provide premium based on the synergy calculations. Individual company value, combined company value, whatever the difference, based on that's calculation, they wanted to provide the premium. And then percentage premium per share Strand company will receive under each acquisition payment method, and justify with explanation which payment method would be most acceptable to them. That's the point. And professional marks will be awarded for all these accordingly. So this is what about the reading of the question, but I strongly suggest the reading of the question is not complete until unless this hard part once again you need to read. Number one, Strand company is of the opinion the most of its value is its intangibles comprising intellectual property. Therefore, the premium is based on, payable on acquisition should be based on present value to infinity. About what? Present value of what? After tax earning the company generated in past years over the return on capital employed of the biotech industry. This is something about the concept of residual income you studied in F5. And this is with respect to regular studies, intangible valuation method. That's called the CIV, capital intangible valuation methods. Very basic point. If I discuss here, a very basic point. Here, actually, yes, examiner wants like this. Profit, whatever the profit they are say, pre-tax, post-tax, profit minus capital employed multiplied by ROI is equal to excessive earning. This is what the basic concept you study the F5. This is residual income. For example, company current year profit, for example, 120. But the company's capital employed is, for example, 1000. And ROI, benchmark ROI or the market return is 10%. So we consider this 100 as notional income. So profit right now 120, and the notional income, so-called market-based income, 100. So excessive earning is 20. So here the intangible valuation method, CIV method, is resemble with this type of method. And yes, we have to make adjustment of the taxes on all these after tax values are like this. But here examiner wants, or sorry, Strand wants to calculate the value based on this 20, present value of infinity. Whatever we are earning excessive, calculated and then calculate the present value. Value our excessive premium, once again with different wordings. The point of issue is that premium means extra. Strand acquire target company wants to get extra amount. That is called premium, the gain based on the excessive earning they are earning, excessive earning they are generating, and the excessive earning they are generating like the calculation, like this calculation. So very important point. So once again you have to read it. Strand is of the opinion that most of its value is in its intangible asset comprising intellectual property, because the research development like this. So premium, that is the extra amount we should get payable on acquisition, should be based on present value infinity after tax. After tax, excessive earning the company has generated in the past 3 years over ROCE, return on capital employed, of the biotech industry. So we will calculate the thing accordingly. Don't worry, 3 years data available. But the have company, that's not challenging. Have companies of the opinion that premium should be assessed on synergy benefits created by acquisition and change in value due to changes in PE ratio before and after acquisition. So it's simple. Just calculate the value of business before and after. That's a norm thing. But here the valuation method used for the calculation is P ratio, not like the free cash flow. Not necessarily all the time the free cash flow. Okay, this is the point. Okay. Further, very important highlighted point. 6 marks theory, 7 marks calculation, 7 marks theory and calculation, 5 marks professional skill marks, and professional skill marks will impact on both calculation theory, both. Most of the marks related to theory. So I can say that here the question said, for example, ignoring professional skill marks. So out of 20 marks, 7 marks is calculation. And for C part, 3 to 4 marks is calculation. So notify this point, almost 50% marks is calculation and 50% is theory. So you have to balance your studies, you have to balance your revision, you have to balance your exam time in a manner to spend the time, to invest the time in a way 50 to 60% theory and 40 to 45% calculation. And that is what the reality of the exam. Although PSM is important, but simultaneously this thing is also important that the theoretical aspect of the AFM you need to cover with the knowledge and also the practicing. That's a key point. So that is all about the reading of the question. You people have any question right now? You can ask me. You have any question? Even if people are watching the video, you can ask me on the WhatsApp. You have the question. Can you please apply me? Okay, thank you very much for this part of the session. Next part, that's related to the requirement of the question. Thank you. Assalamu alaikum.